Assalamu alaikum, everyone. This is Brother Sawaf, and we have this meeting with him regarding the Manzil. You may have known everything about the you must have gone through his website. So the purpose of today's meeting is to just to get more details about the Manzil and the portfolios which we are offering. So I think we just, without wasting any time, I'll ask Brother Sawaf to kickstart it, and probably he'll with this introduction, then with the Manzil and its portfolios. Then at the end, around 15 to 20 minutes, we can ask questions, and Brother Sawaf can answer as much as possible. Yeah.
Jazakallah khairan, Brother Sarfaz, and to all the brothers in the Zoom room, Assalamu alaikum wa rahmatullahi wa barakatuh, and Eid Mubarak to you and your families, inshallah. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي رب زدني علما وارزقني فهما رب يسر ولا تعسر وتمم علينا بالخير. So yes, Brother Sarfraz had arranged this meeting to basically provide you with some more detailed information session with a smaller group of brothers that looked at a more in-depth analysis, and mashallah, they had some very detailed questions for me. Just to give you guys an overview of Manzil, right now we currently have two products. One is a Murabaha mortgage product, which is funded by our own Manzil mortgage fund. And this is capitalized through retail investors such as yourself. So if you are from Canada, typically anyone that invests within their RSPs, TFSAs, RESPs for their children can access our fund through any one of our distribution partners, most notably WealthBar, whereas most people seem to be coming through. And then yesterday we launched our operational round, or our financing round. So this is for a direct equity stake in Manzil, to be shareholders of Manzil. And those funds are used to not only grow our current product shelf, but of course increase the amount of products and we're currently working on. This includes a Musharaka product that we're soon to be launching, hopefully by the end of this month, inshallah. And we're also looking to launch a halal auto finance program with the National Financial Institution, as well as some ETFs, and then inshallah down the road some credit cards. So that's just a brief overview. I'm sure many of you have seen our site. You've seen the certifications that we have through our Sharia Advisory Board that we've engaged with, which is IFIS. So I'm happy to take any specific questions that you may have on on the particular product offerings that we have, or even on the financing round that we're currently conducting, that a lot of brothers have reached out with respect to interest in that regard, inshallah.
Okay, brother, if you could, is everybody aware of all the portfolios which Manzil has? Because I think so they might not have a little bit of background. So if you can just go through a bit of the mortgage fund and the one which you have launched yesterday, the seed investing, so that people get to know about the actual, because most of them, I'm sure, probably they didn't have time from yesterday to see the website even.
Yeah, sure. So
okay.
From an investment perspective, as mentioned, we have a halal mortgage fund, again, the only one in the country, that invests in halal mortgages through Manzil, right? And so if you're looking for a low risk, stable investment vehicle, Manzil is the only income generating fund that is available to Canadians today. Most of the times what we see, especially with those who invested through platforms such as Wealthsimple, or even some of the advisors at the banks like the Khalid Sultans and the Samir Azams of the world, or even Nadeem from Sharia Portfolio, you're mainly investing in equity-based solutions or company stocks. And there's never been an issue with respect to the availability of equity-based investments. It's always been on the fixed income side. Sukuk funds are rarely available, but and the ticket sizes are a lot larger. And of course, they're international based, US dollar denominated, so there's forex risk there as well. Whereas with the Manzil Mortgage Fund, it's Canadian based, it's Canadian denominated. The underlying assets are murabaha and musharaka mortgages, completely structured in a halal way and all certified according to AOFI standards. And this is the uniqueness of that product. And in essence, what you're doing is you're actually helping the community get into riba-free housing, right? That is the goal of Manzil, is to build the net worth of our ummah, of our community, not only from an investment perspective, but from an equity or homeownership perspective, because we do have the lowest participation rates of homeownership in the country, and that's not because of our balance sheet; it's because of a lack of products in the marketplace. And so this is the main fund that we're trying to ensure that it's a huge success. Alhamdulillah, mashallah, we have a huge waiting list. It's over $800 million right now, but of course we don't have $800 million of funding. And so that is our goal, is to continually capitalize this fund, continually deploy capital into our wait list, and inshallah, slowly but surely, that wait list will close up. And so, this is where, if anyone's looking for a low risk, stable, long-term, safe investment, this has become a very attractive vehicle for the local community. And if you're looking for something a little bit more riskier, with a higher return potentially, then we can also discuss the seed financing round as well. But I just wanted to give you as much information as possible on the Halal Mortgage Fund so that we could ask questions about that in particular. And then once all those questions has been satisfied, we can then move on to the seed financing investment opportunity and be able to answer your questions then as well.
Okay. So anybody has any questions? Yeah, you can go ahead. I think so.
Okay.
Has...
Okay. So I have RESP account for my kids somewhere, and I want, like, they are equity based. I wanted to move part of it in less risk, low risk profile. So this is where
Yes.
I should target. Okay. And what are the charges?
But
I see about the mutual funds, like there are websites like Morningstar and so many other websites. Go there, see what is their rate. Is it going up? Is it going down? Can we track Manzil fund like this?
So Manzil Fund is not tracked by Morningstar. You can see, we have a ticker symbol, which is MANZL. I'm just going to send you the link to the directory because we're on the Neo Connect. So I'm just going to send it into the chat so you can see. But our fund basically trades at a fixed price of $10 per unit, right? And basically what happens is you get a distribution on the returns from the fund. So I'm just putting the link in right now. And because this is not a public fund, right? So that's why it's not tracked by Morningstar. And we provide all of the track record or the history of that fund. It is a newly launched fund. 2020 was January 2020 was when it was launched. But you can access it directly through WealthBar, which is owned by CI Financial and now is being rebranded as CI Direct Investing. If you guys have been up to date with the news on that. So we will in the future hopefully turn it into a more of a public-based fund where you can track stuff from Morningstar. But at the end of the day, it's a very simple model, right? The underlying assets of the fund that are being held are halal mortgages. So there are real assets that are owned within that fund. We're targeting a long-term 3 to 4%. And if you're in any type of riba-based fixed income vehicle, you're earning less. And of course, it's haram to be in that to start with. So this is a very good way to diversify, your own portfolios within the types of investment vehicles or accounts that you currently have.
Okay, so what I understand is that this fund price or share price will remain at 10, but you give dividends after every 3 months or 6 months.
Every
right?
month. Every month.
Okay.
Yeah.
Thank you. Thank you.
You're welcome. And just to let you know, Brother Shuaib, if you currently have accounts established elsewhere, you cannot and it's outside of Wealth Bar, let's say, you won't be able to invest in our fund. You'd have to move your accounts over to the Wealth Bar platform in order to access it, right? So not only would you be able to access our fund, which is the Manzil Mortgage Fund, but you'll also be able to access the Wahid Halal ETF, right? So that's the equity-based component, and that's a publicly traded ETF on the NASDAQ. There's lots of information available for that ETF, but that's how we balance and diversify the portfolio. Brother Irtaza is asking, can you tell me a little about Manzil regulated by? Yeah, so we're regulated by FSRA, which is formerly FSCO, so the Financial Services Commissions of Ontario, and are there regulatory disclosure requirements such as quarterly financial reports? For the fund, we do annual audited reports. We provide quarterly, let's call it updates or fun facts. It is not a regulatory disclosure requirement because we are still a private fund by offering memorandum. That is a disclosure required for publicly based funds. But again, we like to treat everything like we are public. So we're happy to provide quarterly fun facts, but annually audited financial statements. And our auditors are MNP right now.
Assalamu alaikum. I just have a quick question regarding the rate of return that is expected. So the 3 to 4%. Can you sort of comment a little bit about this? And because clearly for this product to be viable, it has to be something that is providing value, both to the consumer, who like the homeowner, as well as the investor. So if the investor is getting 3 to 4%, then in my mind, the homeowner must be paying more than 3 to 4%. And of course, there's some fees associated with it. And seeing that, the conventional mortgage is currently sort of, the rates tend to be a bit lower than that. How does that all sort of reconcile?
Sure. So the math is very simple. Our mortgage rates are anywhere between 3.5% and 5.5%, depending on your term, right? The other aspect that our mortgage product offers that you can't find anywhere else is we will give you fixed rates of up to 25 years, right? So in the Canadian marketplace today, you will not find an open fixed rate beyond 5 years, which means every 5 years you have to renew, and you don't know what the rate is going to be within a 5-year period. Today, with our Murabaha product, if you came to me and said, I want a 25-year Murabaha, we will have to give it to you at 5.5% fixed. There's no renewal on that. Okay. So from a consumer side that is looking to get longer term mortgages, there is a direct benefit in the sense that they can't find this product anywhere else from a rate comparison perspective. And then from an investor perspective, I can show you multiple mortgage funds that are on the bank shelves currently today that have billions and billions of dollars in them, and they're generating a net return of anywhere between 1 and 1.5%. So ours is actually a higher yield type product when you compare the conventional counterpart, right? This is not an equity-based product. This is a fixed income product that is equivalent to, your typical GIC, your typical high interest savings account, or a typical mortgage fund. And of course, all of those that we're comparing to are riba-based and haram. And in fact, ours is not only halal, but it is higher yielding, right? So anyone today that is currently in a fixed income type product or solution is not earning more than 2%.
Yeah, and I think one thing that I'm concerned of, and one thing that I'm getting at is, and I can see how the math can work out where you can get a 3 to 4% return based on the 3.5 to 5.5% kind of charge, so to speak, that's going to the homeowner. But do you expect expect that there will be a large take up at a 5.5% rate?
We have
given the current
$800 million
environment? 'Cause that's,
demand right now.
yeah. And I think that's kind of, if you could speak to that a little bit, like
we have a wait list right now that grows by $50 million to $100 million a month of people who request for our mortgage products. And we do not have enough capital to deploy into that program. And they have no issues with our mortgage rates. In fact, it is fully disclosed on our website. You can calculate your payment. That's like, we have product market fit, and we don't have enough supply of capital to build this out.
Yeah. And when you say that, you have individuals that well, I have no doubt that there are individuals that are interested and that are keen to learn more and that want this product purely, because of the Sharia compliance element and the fact that there are such limited options available. So that for sure is I get that. But like, what sort of commitment have they shown? Is it just sort of, are they coming to you and saying, can you price this for us? Or like how?
No. They've completed an application form with all of their data points. So they've given us their income, their expenses, their assets, their liabilities, all of their documentation, except for their SIN number, because we don't want to pull their credit check and burden their credit score if we can't fund them. Right?
Yeah.
So basically they just sit on a wait list, and then every day we constantly get requests of, where is my turn on the wait list? I'm ready to go. And we're basically saying we're continually sourcing capital, and until we can fund your mortgage, you're just going to have to continually wait.
Excellent. And can you
and just to give you a comparison, sorry, on some of the other halal mortgage providers, like Qurtuba is the only co-op based provider in Quebec, and they charge 7%, and there's no shortage of demand for a 7% product. Okay. Ansar charges 7%. Again, no shortage. Sorry. So at the end of the day, if there are people willing to pay 7%, there are, and there's thousands of people in demand for that. There are even more so for a 3.5 to 5.5% product.
I don't think that Ansar or Qurtuba sort of have the aspiration that you do, nor are they, they're quite small, and they have a very small waiting list. And, like we're hoping for more from this actually than any of the existing, to be honest. And so far everything that's been presented is it's been very encouraging. And I hope this thing goes very well, and I appreciate all your time. And I don't mean to sort of come at this from a negative angle. It's more sort of to understand it. And just to compare with what's out there. But yeah, no, I appreciate those comments.
Yeah, no, not at all. And no offense taken. Like, these are common questions I get all the time. But I also tell people, like, the conventional retail space right now publicly, they're comfortable with 1 or 2%, right, as a return. And my job is to make our product as competitive as possible. If you can come to me and say, Brother Muhammad, I can get a 25-year fixed rate for less than 5.5%, I'll beat it. But nobody can provide that. There's no lender in Canada today that can give you a 25-year fixed rate, or even a 20-year at 5%, or a 15-year at 4.5%, or a 10-year at 4%. Right? Like BMO right now offers a 10-year rate at 6.5%. That's the absolute comparable I can give you. So, when you have a marketplace where you have people that are willing to buy and potentially people that are willing to invest, it's really hard to come up with comparables because it's really not available in the marketplace. Like, this is new on both sides, right?
Yeah.
But at the same time, the Muslim community has never had fixed income investments to invest in. They've been used to 0% eroding their capital via inflation, right? So, again, a new product in the marketplace, it's not equity, so you're not getting the 8%, but yeah, you can diversify and get a nice, low, stable risk return. And of course, you don't have to worry about kind of the long-term issues that can come, and it's non-correlated to the market.
Yeah. Can you comment a bit on sort of where you are right now? And I apologize, I haven't been sort of following very closely, but have there been, like, in terms of transactions and homes that have been financed? I'm not sure where you are. I know it's early
stages. Our first
stages.
transaction is closing July 3rd, inshallah. And that's for a 16-year rate at 4.59%. And mashallah, the brother's putting 60% down payment. It's a very solid mortgage.
Perfect. And I guess in this case, the funds that are you guys are using, is this entirely from investments that are made from community members into that murabaha?
Yeah, we do not take any riba-based capital. Like, we're not a mortgage broker. We're not acting on behalf of a lender. We are the financier, and we match make the client with our mortgage pool, our capital pool in the mortgage fund. We manage the whole process inside and out.
For the consumer, so in this case, there's an individual who's committed to this 16-year commitment. They can early pay this, right? There's no penalty for that.
By Sharia, we are not allowed to have any penalties for prepayment. So all of our mortgages again are open. They're not closed like the banks. I don't know if you guys read the article this week of the girl who had to, sell her house prematurely, and she got charged $30,000 by
I saw that. Yeah, because of the
that would
IRD.
Never happen with us. Yeah, exactly. Because what's happening, right? Like, for everyone that doesn't understand, like, you would go to a bank and they'll say, okay, we're going to give you this GIC for 2%, right? For 5 years, you're locked in as an investor. You can't get out. And then they take that money and they pool it with other people and they say, okay, we're going to now lend this out as a mortgage for 3%, right? And then what happens is there's a 1% difference, which is the bank's profit. But then because interest rates declined and this person wants to get out early before the 5-year term, well, they now have to redeploy it, but they promised you 2, but the market is maybe asking for 1.5 or 2 on that same money. And then the bank has to make their money. So they're like, okay, well, we'll make all of the interest that was owed for us, which is the interest rate differential that should have been paid to us over this period of time. And we're going to charge it to her as a penalty. And then, of course, now we can keep our investors whole. We can also earn our profits that we're supposed to earn and redeploy the capital at a cheaper cost.
Okay, so anybody else who has any questions? Brother Imran, mashallah, he had.
So if I may pose a question to the group, and I don't know if any of you are Manzil clients or not, but I'm always interested to hear, like, what is stopping you from becoming a client of Manzil? Like, what more do we need to do? What more do we have to prove or to show you that, this is the right solution for you guys? Because I already know that there's no other solution out there, and everyone knows that there's no other mortgage fund to invest in, halal. But what else, like, what is it that is where the trust and credibility is not fully yet established so that I can build off of what we already have and continually, close that gap for you guys?
To be honest, I think so. I think the first thing which I think personally is that it's not, people have not read about it, looks like, marketing issue. Because I got to know just 2-3 months ago, and since yesterday I'm part of the, I'm your investor, I've invested some amount, but I'm not sure if anybody else has any other reason.
Yeah, I have a question for Mohammed. Mohammed, how much have you invested in the mortgage fund?
All of my investments are in the mortgage fund, brother. I've transferred all of my accounts. I have to support my company before anybody else supports it. Alhamdulillah.
All of your funds, you say? All of your funds?
My RSPs, my children's RESPs, my TFSA accounts, my non-registered accounts, everything that I've built over the years that I've worked with other firms is now transferred over to the Manzil Mortgage Fund. Alhamdulillah.
The fund and not in the seed company, or in the both?
Well, I've spent a lot of money to build the company from the beginning, yes, but that's a separate capital investment. But for the mortgage fund, all of my accounts are over at Wealth Bar, alhamdulillah.
Okay, thank you for replying to that provocative question.
No problem. Practice what you preach first, brother, right?
Right. Yeah, very right.
Yeah, okay. I think so. If somebody does not have any other question, I think so. Then we can go for that seed investing, which yesterday I think so many of the, which I know.
Yeah, were there no other concerns that like I could do to help establish the company in a better position to attract capital from the community? Like, what else do you guys need from me? I'm really, really interested to hear.
Yeah.
Assalamu alaikum, brother.
Wa alaikum salam.
My name is Muzaffar. Actually, I was a little bit late to join. I did not listen the initial about 10-15 minutes. How much do you ask for the down payment?
Minimum 20%.
Minimum 20%. Okay.
Yeah.
And you have the same process of five of the total family income salaries you get.
Yeah, we use the
like
same
standard
we use the
bank?
same underwriting or qualification guidelines as the banks, or which is the same as CMHC. So underwriting in
Okay.
terms of income qualification, GDS, TDS ratios, all of that stuff doesn't change, right? So if you can qualify at the bank for 20%, you'll qualify with us at 20%, except for the fact that you'll have to wait longer than you'd like to, because the bank has access to unlimited amounts of money and we don't.
Okay, makes sense. Thank you very much.
You're welcome.
And if you can explain, Brother Sawaf, about the minimum 20%, why is that 20% minimum?
Yeah, no, absolutely. So as you guys know, if you are able to put a down payment of less than 20%, you will be forced to take on non-takaful based mortgage insurance through CMHC, Genworth, or Canada Guarantee. And so our Sharia board has advised us if there is a way around that, and we said, yeah, the only way around that is to take on minimum down payments of 20%. And hence that was the route that we went, because it is avoidable. If it was not avoidable, meaning that every single mortgage in Canada has to have mortgage insurance, then we would be happy to take on 5 and 10% down payments. But that is not the case at this point. So we require minimum 20% down payment because there is no takaful-based mortgage insurance program available for our halal mortgage program.
Regardless, and I think, you know, there are certainly there's the Sharia side of it. I think people like to get that comfort that this is indeed Sharia compliant. I think you guys have done some good steps there, and you have got the right individuals, and you've got the opinions of the scholars to support, you know, that what you're doing is within Sharia. And I think, you know, for some people, you know, they might need a bit more than others, and I think continuing to with respect to that will be important. But then on the other side of it, I think what's also important is that people want to see this as something that's going to be viable for the long term. They want to see that this is and for, I think for that.
So sorry, what do you mean by that? I understand the generalities of that point, but you know, when you guys as a community come to me and say, like, the number one thing in our market research was, what is your source of capital? And we're like, well, we're not taking bank capital, it's private investment. Yeah. And who's the private investment? The people that I'm looking at the screen from. Yeah. And if I can't get money from you guys, then I can't deploy into the mortgage program. It's from some GCC sovereign wealth fund, which is potentially possible, maybe 10 years, but it should come from. If it's not coming from you, right? Then everyone's just just waiting for that game. And what I tell people is, you're the ones that's going to make this viable. Because if I fail, it's not because of something I did wrong. It's because you guys didn't support me, right? Or am I wrong here? In this model, in this particular model.
And one thing that I think that you've done, it's an eligible investment from an RSP perspective, because there are a lot of people that have, of course, a lot of their wealth that's sort of in RSPs and other tax sheltered vehicles where
The majority of Canadians' wealth is in tax shelters.
Exactly. That's kind of how it works,
not just
right?
the Muslim community, right?
Yep.
Yeah.
People who've had income for years, like that's the only way they've been able to sort of build wealth is through that tax sheltering, because it's just the nature of our system. So I think that's a really good thing. And I think sort of making sure that that's well demonstrated and in your illustrations and in your pitches is going to be important. I think one of the troubles we've had is, the community's been burnt a little bit by the financial scandal back in the day. And then whenever you see somebody that's opening shop, like it's unfortunate, but like in the back of our minds, there's this fear that, we might be going down this path again where, where something like this will happen. So I think giving people assurance that, we've taken steps to make sure that such a thing is not going to happen. And, that's important. But then also, I guess what I mean from a long-term viability perspective is I think people want to be able to, see what's there and be able to say, hey, this thing's going to work, right? And that means a few things. Like I think for me to believe, okay, this thing's going to work and it's going to do really well, it has to make sense from both perspectives, for the consumer, the homeowner, as well as for the investor. And I think you sort of very nicely try to illustrate that balance that you have. And there is that market, and at the same time, there's an appeal for the investor too, because it's a good yield that they're getting. So that's really positive. With homeownership, it's just such a large investment for the community, and there's always a bit of nerves around, dealing with somebody that's new in this space, right? So versus dealing with BMO or RBC or whatever it is. So one of the thoughts that I have is,
but sorry if I may interject there. There doesn't seem to be a shortage of people willing to take money from us, right? Like I mentioned, like it's $800 million growing at $50 to $100 million a month, right? Like if I had $1 billion today, I don't think I would have an issue deploying $1 billion worth of capital, right? So people are obviously trusting and saying, yeah, I'm willing to take from this program because it checks all of the boxes for me as a homeowner. But then the other side of the marketplace is, well, what is it not checking the boxes from the side of the investor?
Yeah, and you know what, to be honest, it seems quite appealing from an investment perspective as well. Because I personally, I think the yield is quite attractive. It's a pretty like the return that you've noted. Like I think that's a very good return at a very, very low level of risk. So I think that's positive. I think it's just more about really just some heavy marketing at this point to get it out there. And you need a lot of supporters. You need on your side that are going to push this out to their friends and family.
Yeah, no, you know what? We've seen some pretty good, I'd say, initial traction. We understand that there is a ratio, right? Like if you're coming to me and you're saying, especially in Toronto, right? Like, houses are generally $800,000 to $1 million, right? And you're saying, okay, I have my 20 or 30%. So let's just say you need 500,000. So one person needs 500,000. And my average investor is, let's say, 25,000. So I have to find 20 investors for one mortgage, right? So that's where the ratios are thrown off. And so, alhamdulillah, like we brought some pretty good, let's call it investment capital over the first few months so that we could do a couple of deals. But we really need to ramp that up. And of course, the people that have invested and that took that initial risk, let's say, have told their friends and family. But like you said, we need to do more and more of that. And we need people to just basically say, you know what, if we're going to support one entity, let's just support this one. And if you guys understand how the model works and you're saying, well, if we're going to support it, then the lower the risk of, let's call it, solvency or whatever, or the higher the longevity and sustainability of this firm, then let's just all get behind it, because at the end of the day, it's benefiting you directly. It's not benefiting us, right? We're here to tell you that we can structure things in an appropriate way. We have all the mechanisms and the governance and the Sharia in place to create any product that you guys like. But we can only move as fast as the uptake, right? The faster moving at a really, really slow pace, because we can only move as quick as the community is onboarded with our program.
Inshallah, Mohammed, I will, inshallah, in the next couple of days, I will make some investment in your mortgage fund, inshallah.
No, inshallah, and I really, really appreciate it. But I'm pretty sure everyone here around the table has RSP accounts, RESP accounts, potentially maybe TFSA accounts, right? And if you're currently invested it through the bank, then why not have it invested through another bank, which is CI Financial, the largest asset manager in Canada with over $200 billion, because they're the ones that are protecting and backing your accounts, right? We're just a product manufacturer. We're just a fund, right? But the accounts are held, through Wealth Bar, which is owned by CI, protected through CIPF, which is $1 million of insurance per account. So you don't have to worry about anything happening there. And the money just flows to us, right? But every Muslim in Canada isn't doing that, right? They're keeping their money at RBC or BMO or with their employers, invested in non-Sharia compliant equity-based stocks or equity funds. And yeah, I'm not everyone knows about us. Of course, we have to get the word out there a lot more aggressively. But for me, it's funny because I talk to a lot of banks, and they tell me, we know there's an opportunity, but we don't see the community mobilizing. And so they look at it, they'll take examples. For example, they say, and I tell them that there's about, $20 billion worth of investments within this community. And then they say, well, look at the Global Iman Fund. Why does it only have, $50 million? Why does Wealth Simple? Sure. No, of course. And I agree. It's 2.8%, very high.
It's ridiculous.
But what about Wealth Simple? Wealth Simple's halal portfolio is $20-30 million, right? So I've talking to the Wealth Simple guys. I'm trying to get my product onto their shelf because they're telling the community, invest your cash. I mean, keep your fixed income position in cash because we have no halal fixed income. So I come to them and say, I have the halal fixed income. And they say, yeah, but we're not seeing like the growth rate that we were expecting. Like, we studied the market, there's so much. And then I come and tell them, I say, listen, you guys don't have Sharia governance in place. You don't have a Sharia board. You don't have certifications. There's lots of skepticism within the market. It's a white company trying to attract brown people. I tell them these things, right? So I understand that. But at the same time, there isn't really a true example where these banks and companies can say, hey, look, it's working for them. It seems that they've got it right. What did they do, and how can we replicate that model versus staying fragmented?
So, Mohammed, have you thought about, I know you did mention that you are looking at, for anybody to be able to get mortgage from you, they need to have a down payment of 20%. It may sound a little strange or hilarious, I don't know, but have you thought about, okay, so we have, you said, I don't know, $500 million worth of people requesting for mortgage, right? So let's say if to the same people who want to own these houses, if it is said to them that, okay, you have to invest in the mortgage fund, starting from maybe a very small fragment or section, not 20%, but let's say 1% or 0.5%. And then as you go, you can at least serve one more or two more customer or three more customer, or this might gain traction that way. Have you thought about it that way?
We have. The problem with the banks is it costs them the same amount of time and resources to deploy $10 million than it is to deploy $10 billion, right? The numbers are just different, right? But they have a full team of analysts. They have a full due diligence team, a compliance team that has to mobilize, and they have to see the opportunity the way I see it and the way you guys see it for them to be convinced. Trust me, brothers, I've had conversations with all of the banks at the highest levels. And the conversation always ends.
I meant, Mohammed, the people who are asking you who are willing to take the mortgage from you. It's a little funny if they are also not interested in investing with you. Because
so we prioritize the people we give our mortgages to is to the ones who invest in our fund first, right? Because we know that they're supporting us and we're willing to support them. Right. So, and we do tell them, like, instead of putting 50% down payment, why don't you put 40% and invest the rest in our fund? Right. Because then you can support some other brother the way that they're supporting you right now because we've committed to your mortgage. So we're implementing a lot of that stuff. But of course, we can't force people to do these things. Right. We can't like legally bind them to be like, we're not giving you a mortgage until you invest with us, and you have to invest the minimum amount. That's the problem. They're mutually exclusive, and you can do whatever you want at the end of the day.
Brother Asif or Atif has a question here. Asif, okay, go ahead, please.
Assalamu alaikum, brother. This is
Salam.
I have two questions, and I don't think that probably these were asked before because I joined up 5 minutes late. My first question is that there is a long list for the applicants who are interested to get the mortgage. So what is the average period time? I know it's a difficult question for you to answer, but just for the sake of, any tentative.
Right now, we tell people 12 to 18 months, but I can tell you there have been people waiting since 2017.
Okay. So my second question was follow for this one, that what is the criteria to go up the ladder? Like 20%?
Yeah, so larger down payments. So ideally with a larger down payment, it means we have a mortgage size less that we have to fund, which is easier, right? Like if I have $2 million, I'm not going to just do two $1 million mortgages, right? I'd rather do 4 $500,000 mortgages, because that means I've helped 4 people, and I've also lowered the risk of the portfolio for the investors, right? So, we want to see larger down payments, smaller mortgage sizes, strong income. And then, of course, knowing that they've invested, their RESPs into the fund because they want to help support this program. So these are all things that we look at, when we're qualifying individuals as kind of who comes. It's not first come, first serve. It's really based on kind of the holistic, view set that we take on a per individual basis.
Because you just gave an example of one of the brother who will be getting the first mortgage.
Yes.
60%. So if I raise my down payment to 50 to 60%, because there is always a little bit of delta which needs to be covered. So if I cover the most by my down payment and increase the down payment by 50, 60%, and I have some investment shares, so definitely it will push my case up in the ladder, right?
Absolutely. Yeah. No, absolutely. Like right now, we have about $220,000 in the fund right now, and we're looking for a mortgage size of 200,000. Like I'd rather deploy it immediately versus have to sit on it. So if we can find a $200,000 mortgage, I'm willing to deploy that today, right? Versus like, okay, let's wait until it reaches 400 and then bring it to a customer that needs 400, right? So these are always things that we look at, and we're happy to entertain if anybody wants to email us directly if they have a certain situation they feel that they could be accommodated based on our criteria.
Okay, thank you so much, Jazakallah khair, and I really appreciate that you are doing, and I wish that one day you will be able to finance as many people as they apply with a
Inshallah, that is the goal. That is the goal. Yeah.
Thank you.
Okay, I think so. There's 10 to 12 minutes left, brother. If you could speak about the seed investing, I think yesterday on the group somebody had some questions, like one of the main one, like what would be the profit rate return on investment on that one as well, and how does it go about?
So the thing with let's call it investing in private companies, in the operations of a private company, especially as a startup, there's a different risk at play here, right? If any of you guys have invested in startups, then the underlying risks that your return could be super, super high, or it could actually go down to zero, right? Like there's no guarantees. And so, what we've done, like this is not our first round of financing. This is our second round. Like we raised last year about $1.2 million. And that was just based on an idea. Like when we were knocking on people's doors and talking to our networks, we were like, we want to build an Islamic bank. We cannot guarantee you that we've figured it all out, but we have a pretty good idea that we can execute on this model. And we have the right people in place. And people were willing to commit to that idea, and they wrote us checks. And they got a lot of value because they were the first investors. It's the same people. It's the same thing. Like if you were the first investor in Facebook, right? Some people didn't believe in the idea and some people did. Now we're coming to you and saying, we've reduced the risk. We've actually executed in the sense that we actually have products in the marketplace. We have traction. We have clients. We have revenue. And we want to now build the next stage of the company. And so we're now looking for a new set of investors to come in and help us grow the company to the next level. And this is money that comes directly into the operations, and we use it for marketing, we use it for product development, we use it for building out a technology stack. We use it for, salaries, because we have to hire people and build these teams out so that we can accelerate growth, and we can accelerate more and more people getting into the fund, more and more people getting into mortgages, and of course, attract other revenue streams to our program. And so this money will be used for that. And then inshallah, by the time that we have to raise another round, the valuation will be higher, which means that you guys will benefit because from a good return. But the previous guys before you will benefit even more because they came in at the lowest share price, right? And so that's how the startup world works, is you continually do financing rounds at higher and higher valuations. And the later you come in, the more expensive or the higher the share price you have to pay. The earlier you come in, you get a cheaper share price, but of course you took on a larger risk, right? And then basically you'll own these shares up until potentially we IPO. And then when we IPO and they're on the stock market, you'll have X amount of shares that you may have paid for $1 now, that may be $20 worth at that point, right? So you'd get like a 2,000% return, right? So if you owned, $10,000 worth of shares of Manzil at that point in time, when we IPO at $20, you would have $200,000, right? From that $10,000 investment. That's how these investments work, right? And at the same time, you're also owning part of a future Islamic bank that we're trying to build. You're trying to also build a legacy for yourself. And inshallah, barakah will come from that money, because you're helping, the ummah eradicate riba, right? So that is the mission and the vision. Right now we have a seed round going, where you can basically open up an account. You can deposit a minimum of $500 to own shares or be a shareholder of Manzil. And we're looking for as many people as possible that are buying into our vision, our mission, and want to be part of the journey.
Mm-hmm. And I think so in the other group, somebody had asked about when could be we don't know when could be the next round of the...
Yeah, so it's not about when the next round could be, because I think that particular brother was asking, well, if I don't have money today, can I get in the next round? That's what he was asking. And typically speaking, in startup world, only the first two rounds, which are labeled like the angel and the seed round, are usually available towards, let's call it retail investors, like non-institutional or non-high net worth or accredited investors, right? When we move to the next financing round, it'll be called the Series A, right? And when you're looking at a Series A, you're probably asking anywhere between $5 to $10 million of financing. And that is actually going to be exclusive towards institutions only, right? So we're not going to be able to come to you and say, hey, we're willing to take $500 checks. We're going to be going to the VCs or the private equity firms and saying, we want $1 million from you, 2 million from you, 3 million from you, and 5 million from you to make this happen. And then that's it, the round closes. And those same investors are not going to want to be partners with smaller type individual investors, because they're putting a lot of money to the table. So they're going to want to have a board seat. They're going to want to be able to help in moving the company forward and build it the way it should be built. And so they're not going to actually allow for room for smaller type retail investors to be part of that round. So when I tell people that this is the only round that you'll have the ability or potential to be part of, I'm not saying it to be like, oh yeah, like get in now before you don't get it. It's just because the way future financing rounds are going to work.
Okay. Because I'm not sure, but I think so that brother was probably saying that, okay, if we don't have a next round, then probably, there won't be any return or something like that. He was mentioning, if I'm not mistaken.
No, so what we're doing is we're providing this under the agreement of a SAFE, which is a simple agreement for future equity, okay? Mm-hmm. And the reason why we do this is two things. We want to lower legal costs, right? Because it's a simple form that you can complete. But we're also giving you a discount of 20% for investing now before the round closes, right? So this financing round, we want to raise about $3 million, okay? We've already have allocation of about $500,000. And we're saying, okay, let us give $500,000 to the brothers in the community that are interested in what we're doing, and at least let them have some vested interest in the growth, right? But the other $2 million is going to be remaining for VC or institutional, and they're the ones that are going to close out the $3 million round. So when they close it out, your simple agreement for future equity will automatically convert to their price with a 20% discount. If I didn't give you the safe, then you would just get their price. But I'm basically saying I want to give the community a discount or a benefit of 20% so that they don't have to pay the price that these big guys are going to pay in 2 months or 3 months time, right? So that's the way this agreement works. If you want, I can price it at the price that they're going to buy it at, and then you don't get the discount. It's not a problem. But at the end of the day, I win and you lose, right? Because I get your money and I have to, and I get it for a more, let's call it, it's more expensive for you. And I don't have to give you as much return on the back end. So we decided to do it that way for the benefit of the community.
Okay. Thank you for clarifying that. Yeah.
You're welcome.
Well, I've already sent it yesterday. You know that. So
Yes. No, absolutely.
Mm-hmm.
Any other questions, comments, or concerns regarding both these opportunities or clarifications?
Okay.
So yes, Assalamu alaikum. I have a couple of questions. So let's say I take a 15-year mortgage with you guys, right?
Mm-hmm.
And 5 years down the road, something happens. I get into an accident or a tragedy or whatever, lose my job, and now I'm in a position where I can't make any payments. What happens in that sort of a scenario? And the second question, which is also related, is if I wanted to sell the property while being, a 7th year of a 15-year mortgage, what happens in that scenario, right?
Yeah, so you can sell the property anytime, as I spoke with Mustafa, and there's no penalties associated with that, right? So just because you're in a term-defined mortgage doesn't mean that you can get out early. And basically what happens is it's your property. Like, there's no partnership agreement here. There's no profit sharing. So when you sell it, you're going to get the fair market value. You're going to owe us what's owed to us in terms of the principal balance that's left, and all of the profits are redirected towards you, right? If you become disabled or you cannot earn any income, in this situation, let's say, would you be the only one able to make the mortgage payments? Like, there's nobody else in the household that's earning an income to pay?
Yes, that would be the case.
Yeah. So basically, we would give you as much, let's call it mortgage deferral or, reconciliation as possible. But there will be a certain point in time where we have to basically come to an agreement and say, if you can't continue to make these payments, right, and we've done everything that we possibly could to accommodate you, then you may have to sell. And again, you would sell prematurely from the term. You would basically pay whatever's remaining for us from a principal balance perspective. And then whatever the profit, it's yours. And you walk away with cash in hand, and then you want to rent or you want to buy a smaller property for cash because that's all that you have left. That's your prerogative. But at the end of the day, we have investors that we are accountable to, and we have to ensure that we're maximizing the return for the capital that's being deployed, right? And there's nothing impermissible about what I spoke about from a Sharia perspective, right? Because we have, a mortgage on the property because of the amount of finance that we provided to you, we are allowed recourse on that asset specifically, but not recourse on your personal assets.
Okay. And in terms of the title deed, would I be listed as a partner with you?
In a murabaha mortgage, you are on title as on sole title.
Okay, awesome. Thank you. Thank you very much.
You're welcome.
Anybody else?
Okay.
Yeah, I think so.
I have a difficult question. Like what I see, there is a very high risk in your model. Why? Because we are Muslims. The risk is high. And why I am saying that, long ago in my childhood, there used to be a bank with the name BCCI. So do you think you have done something to take care of that risk?
Sorry, what's the high risk? Can you elaborate what you determine as high risk in the model itself? Where is the risk that you see?
Like risk of model getting failed. Like maybe 5 years down the road, I won't find this company with the name Manzil. It has gone bankrupt. It has run away with the money or anything like
so
financial scam or anything. Like BCCI was a very big name.
Right. So we don't directly have ownership of the fund, right? We are trustees of the fund. Okay, we've been appointed as trustees of the fund. All of the money that comes from your RSP accounts goes into a trust account. Okay, so we have multiple financial management controls, like more than one signing authority, in order to move money around, right? And at the end of the day, this money is in a trust fund, so it's in essence entrusted by us to ensure that it gets deployed into mortgages, right? It cannot go anywhere else, okay? And so let's just say Manzil, the management company, went bankrupt, right? We didn't have enough operational capital, and we decided to just basically walk away. That fund is still alive and intact, right? All of the mortgages are still there because Manzil doesn't own the mortgages. The fund owns the mortgages, which is owned by the investors, right? You guys are the LPs of that fund. So if we decide to walk away, well, then that fund would then appoint a new trustee to manage the fund and how its operations would work. But your money would never be lost, right? And in fact, your money is actually sitting in the mortgages themselves, backed by real estate, right? And that is the beauty of Islamic finance. It is always asset-backed or asset-based transactions. And that is how every mortgage fund works, even at the banks, right?
In fact, you guys won't even have much of a cash position because all that gets deployed towards purchasing homes.
It'll be zero. Oh, ideally, it'll be zero, right? That would be the most efficient model. Yeah.
I think it's 8 o'clock on the dot. So I'm not sure if anybody has any questions. So I think so they can, if possible.
Yeah, feel free to email us. Yeah. I'm just going to put my email address here if you guys want to contact me directly. But yeah, happy to answer any further questions or any further clarifications on particular situations that you guys have. And I just hope that you guys can continually support us on this journey. And if you can't directly, then please at least spread the word and get your friends and families involved, inshallah.
Inshallah, Brother Muhammad, inshallah. Keep up the
good. Thank you so much. This is a great initiative, and we all wish you the very best. May Allah make this successful for you and for our community. Jazakallah khair.
Jazakallah khair, brothers. Assalamu alaikum, and happy to do this again.
Thank you very much.
Okay, assalamu alaikum. Okay, bye-bye.